Hey everyone, this is Paul, and this is a panel on transforming money and payments. So these entrepreneurs right here are basically building money or innovating on payment infrastructure from the ground up, which is really, really exciting. And we've been partnered up with these companies for a little bit. I'm going to do a quick introduction. Evan of Ampleforth, Tyler of Flexa, Alex of Transparent Systems. And so what I'm going to do is I'm going to leave it to them to give quick background on themselves and how they got into crypto, and then just a little background on their project, and we'll just kind of ask some specific questions on their views and their project. So why don't we start left to right? My left, Evan, why don't you go first?
Hey, my name is Evan. I'm the co-founder and CEO of Ampleforth. Got started with crypto, thinking about Bitcoin, thinking about money, thinking about scarcity, and what was special about blockchain technology in particular that we could now articulate scarcity in a purely digital context. Originally studied engineering at Cal. Actually, have known Paul for a long time, long before this business. But yeah, I mean, it was always kind of a head scratcher for me. Like, how can we build a useful financial ecosystem on top of a fixed supply commodity money like Bitcoin? Hadn't we tried that with the gold standard? Hadn't we tried that under Bretton Woods? And just kind of, we kept zooming in on those questions and ended up creating the Ample, which is the first rebasing cryptocurrency. It's a cryptocurrency like Bitcoin, except it can be used to denominate stable contracts.
Awesome. No, that's great. Thank you so much. The unique thing about this space is people have different backgrounds. Evan used to be a pizza entrepreneur and is now a crypto entrepreneur, which is amazing.
Yeah.
Tyler, why don't you go next?
Yeah, sure. So I guess I've been a technologist again by training. I started in aerospace engineering. I worked for NASA on the space shuttle program and the Mars crew module. So projects very, very near and dear to my heart. Getting to work with astronauts and just some of the intensity of those programs, super excited about. But I've just been, this is my fourth company, I guess, at this point. So I've been an entrepreneur for quite a while, over 25 years, and then have just been investing in various projects, early stage technologies, very active, for more than 20 years at this point. And then got into, I guess, crypto in a greater sense in early 2011, discovered Bitcoin and started using it very aggressively just as an actual payment instrument. I just found it to be so incredibly novel. Some of the companies I've been working on now for the past 10 years have really revolved around payments. So obviously the title of this panel and what I'm looking at doing now, I'm very excited about, happy to share a lot more too.
Yeah, a lot of domain expertise there on the payment side from Tyler. Alex, go for it.
Yeah, hi, thanks, Paul. And it's great to be with everyone here today at the Pantera Summit. So I'm Alex. I'm CEO of Transparent Financial Systems. I've been working in what I consider the applied cryptography industry now for almost 3 decades. I got my start in the 90s working on export control laws as it related to strong encryption, and specifically focusing on the importance of this area of technology to commerce on the internet, and have been pretty much following all the different commercial applications of strong cryptography since then. Most recently, before joining Transparent, I was one of the co-founders of Blockstream, working on Bitcoin infrastructure. And now at Transparent, we are building a distributed payment rail for B2B payments using distributed ledger technology.
Thank you very much. I'm going to go back to Evan, and during the last panel, they talked about DeFi Summer, and I believe Ampleforth was part of that, and you guys did some really cool liquidity mining on Uniswap and just got a lot of attention. But just to take a step back, elastic supply money. I mean, when people think about Ample, I think some people can get a bit confused on, really just what it's supposed to be. I mean, to see, tokens kind of go up and down in your wallet, that's a pretty crazy concept. And, how should people think about Ample? I mean, you've had some great success. I mean, up to what $1.5 billion market cap, but is this supposed to be a replacement for Bitcoin? Is it a stable coin? Like, what is the vision for Ample?
Thanks for kind of reading that in, Paul. You're right. There is a great deal of confusion in general around Ample because it's so different, right? The idea of, the supply of tokens in your wallet actually fluctuating based on demand. But the way we see it is it solves the simple kind of contract denomination problem for Bitcoin without introducing kind of market risks or custodial risks. So Bitcoin's great because it's censorship resistant. It doesn't rely on centralized banks to custody assets and doesn't rely on buyers or lenders of last resort to kind of bail out markets. It's just this simple commodity money. But the problem with Bitcoin is it's very hard to kind of use it to denominate contracts. Like I wouldn't want to bet you anything denominated Bitcoin. I wouldn't want to say like, okay, let's bet, X Bitcoin that the Lakers make it to the 2021 semifinals, right? I wouldn't know what my debt obligation would be in that case. And for that reason, it's a very poor asset to be used in contracts. And with Ample, we have this price target, which I think is what leads to a great deal of confusion around whether it's a stable coin or not. The price target is such that each Ample is worth one 2019 dollar, but we make no attempt to eliminate volatility. We just translate the volatility demand from price to the number of units in your wallet. And for that reason, we can start to construct basic contracts. Like I could bet you 100 Bitcoin, right, that the Lakers would make it to the semifinals and not end up owing you $1,000 or $10,000. I could denominate a car loan over the course of 3 years in something like Ample. And when we eventually get on lending platforms, I'm very excited about Aave, you could borrow Ample like a stable coin, even though it's not. It's still this non-dilutive asset that doesn't require any sort of collateral and doesn't rely on external market. It can't break. So Ample's really for folks who think there ought to be an unbreakable asset like Bitcoin that can be used for contract denomination. And we're very excited about what can be built next with Ample as a building block.
I guess a quick follow-up question to that, because some people may say, okay, well, I can see Bitcoin not being good for, again, contracts, and USDC, it's pegged and it's a bit more stable, sort of centralized. And then you have Ampleforth, but then you have all of these other algorithmic stable coins that some aren't as stable, but some have been more stable than Ampleforth. So how do you guys compare yourselves against the other algorithmic stable coins in terms of just function for this use case?
Yeah, I mean, I think in general, you're right. There are other algorithmic stablecoins. Many of them use like a bond-like approach, and really systems like that work until they don't. The Ample is pretty much unbreakable. It's really, how Bitcoin can't simply break based on demand fluctuation. Like you could increase your Bitcoin holdings tenfold. Your Bitcoin holdings could decrease tenfold, but none of that breaks Bitcoin, right? So Ample is similarly unbreakable. And so because censorship resistant is such an important piece of this puzzle, right? The Bitcoin protocol, I mean, it functions as a hedge against inflation because number one, nobody can tamper with its supply policy, but it's also an asset that you can't arbitrarily freeze and seize. Ample is meant to be that way as well, just something that truly can't break. And so all of the alternatives out there that try to kind of assert some sort of balance level stability and relies on market forces or the US dollar itself do have hidden long-term risks.
Sure.
Now, I think that they serve a purpose today, right? But for us, it was really important to kind of try to recreate the benefits of a commodity money that can be used as a building block for an alternative financial ecosystem, right? That's beyond the reach of politics. And so really trying to deliver on more of that kind of base money vision.
Thank you very much, Evan. I agree that the bond markets, we've seen a lot of volatility come from that. It seems like Ampleforth is a bit more rules-based, which is a lot more similar to Bitcoin. So Alex, I mean, tell us about transparent systems. I mean, you're really trying to use distributed ledger technology to better facilitate payments and settlement, and use the unique properties of 24/7, et cetera. But I guess taking a step back, I mean, what is broken right now, and what are you hoping to fix with tokenization and the distributed ledger technology?
Wow. Well, I think with this audience, we probably could come up with a very long list of what's wrong with our current payment infrastructure. I think a lot of the problems that we're all here to solve stem from, a pretty significant set of challenges, right? I think everything from slow speeds, high costs to use, high cost to maintain, expensive compliance, really poor security and privacy properties, right? So, from that perspective, it's exciting to see all the innovation in the space, but I think we have to remember that, like in the context of B2B payments, which we're working on, over half of our payments go through the post office on paper, right? And ACH, which is our primary rail for business payments, is from 1970s, right? And I think it's somewhere around 30 billion transactions a year, but it costs the industry almost 10 billion in fees, right? So, and I think you just tying this back to innovation, which is, what we're all about with our companies. These systems and these problems that we're talking about here are a real drag on innovation. And, even the coolest, hottest new cryptocurrency companies at the end of the day have to deal with the legacy payment infrastructure that we have, right? There's really no way to get around it.
And so with your solution, Alex, how does it work, and what are the players involved?
Yeah, I think a couple things, right? Why not use a cryptocurrency, right, for B2B payments? I think that's certainly, one of the ideas. And, I think there are a number of challenges with that. I think, certainly accessibility, price volatility, which cryptocurrency, are a set of businesses going to select to transact and settle payments and debts against. Those are challenges. And of course, I've got a siren going by here, one of the consequences of doing this virtually. But, I think that the thing that we've discovered as we started to look at how to look at new opportunities with this area of technology for payments, the kind of major design constraint that we all have to face is that when you talk to businesses, their unit of accounting, their financial reporting, it's all in US dollars, right? So, if you're approaching them with the idea of using a new currency and a cryptocurrency, at that, it's pretty much a non-starter, right? So that's pretty much where we started thinking about how do we approach this, right? So from our perspective, that unit, that token, that cryptographic asset has to be a cash equivalent. It has to be, from a regulatory standpoint, viewed as a dollar. And so everything that we've built, we've leveraged a number of different financial structures and different precedents from a legal perspective, dating all the way back to the late 1800s, to create a cryptographic claim, as we call it, that is, from a regulatory standpoint, viewed as a cash equivalent. And so that's where we start. We bring together a number of different financial parties into a permissioned network. And I can go into more of that, later as we get into the discussion if it's interesting. The cash equivalent claim is fungible to any financial business or customer of theirs in the U.S. market.
Awesome. Thank you so much, Alex. Next, I'm going to go to Tyler, and you are redesigning B2C payments, starting at the point of sale with major retailers like Nordstrom and Starbucks. And, we always use the phrase, when are we going to be able to use Bitcoin to go to Starbucks and pay for it? And you guys are making payments happen, at these retailers. And so, you describe payments as purely digital. And what are you guys doing that's different, that's really going to make payments take off for these retailers and in general?
Oh man, that's a very lengthy discussion itself. As kind of Alex and I and both even alluded a little bit, kind of the complexity, the myriad of just kind of how this all comes together, some of the issues that are there. But in general, Flexa is just highly merchant focused. And so we basically have built an all new pure digital payments network. And by pure digital, it's no payment cards, there's no physical cards, there's no other physical manifestations that need to exist. It can be just on your phone as a purely digital transaction. And we're, as I mentioned, highly merchant focused. We integrate with all of the existing hardware and software that a merchant already has. So they don't need to make any upgrades. They don't even need to understand what cryptocurrencies are. They don't know anything more around a digital asset at all, other than they can now allow these things to be usable as payments. And from their perspective, using distributed ledgers and what Flexa ultimately provides, we provide a fraud-free payment to them. So no chargebacks, and it's also faster than any payment method that exists, and it's cheaper. So from just a purely value proposition to the merchant side, it seems like such a no-brainer of, oh, now all these assets can now be usable, and it literally is 10 times better on that side. And then what we do is now open that up using an SDK, which we're launching now in beta next month, to let any wallet or any app now be able to integrate into this system. So from a consumer perspective, now they can just spend whatever assets they already have in whatever wallet they already have. They don't need to download anything else. It literally just makes it as seamless as possible with assets that customers already have, apps that they already have, and now just spending that seamlessly across all these other merchants in a really nice kind of native integration. And that's all live now. So kind of as you mentioned, NCR, the largest point of sale provider in the world, and especially in the US, we have a native integration where you can pay with Flexa enabled apps, and it's one tap and you can scan a QR code, and that's all you need to do. And it's live right now. We have some of the largest merchants in the world, including some coffee shops that you can go use. And yeah, if you check out Twitter, we have a growing number of people that are really excited about this and spending the assets that they have and sharing videos and kind of how quick and elegant the experience actually is. And that's what we've really focused on. Everyone talks about crypto and the challenging user experience and everything that, that itself a long discussion, but we've tried to really abstract that into something super simple on all sides. And then on the merchants particularly, they have all these existing systems they've used for hundreds of years. They have accounting systems, they have how they pay people. So Alex was totally mentioning quite a few of those pieces already. We have to literally integrate with that as best as possible to where it's just super simple for them.
That's great. I mean, I use your mobile app and it's an amazing experience. And, again, like you guys handle the plumbing in the background. So it just makes it a lot easier for people to interact. And I guess the last question on just what you described, you have the AMP token, the token behind, your project. I mean, how does that function into everything?
Oh, it is absolutely critical. It is the most critical component of how all this works. So First off, it's the SDK is permissionless, so any app should be able to now integrate within Flexa, and it'll never be able to work where we don't want a trust-based system where now Flexa needs to trust all the entities transacting. So all we need to do is basically allow them to pledge collateral. So the token itself has one function, only one function. It's a collateral token. So the wallet basically has to put collateral up, not the individual user. So a user will have no, idea this exists. They don't need to interact with it. They don't really care. And then there's, I guess, two pieces to it. So then the wallet can now perform transactions on behalf of its users. And then the small fee that we do charge the merchants, we use to then repurchase the token in an open market purchase, and it's a fixed supply token. So all of that gets distributed back to the people providing the collateral. So it's actually a really novel business model in that Flexa itself, this entity isn't just collecting fees and has a very standard business model. Flexa doesn't have a business model. It doesn't make money. It never will make money. All of the value in the entirety of the Flexa network is accrued in this collateral token itself. Like 100% exclusively, everything is accrued in this decentralized system. And the one thing that's also critical of how we've architected this is you look at these things of, well, why is this better than what already exists? And I'm a very strong believer that there is a mix of centralized and decentralized systems that are an ideal sort of hybrid approach of what becomes really, really massively valuable in commerce in the world and everything. That's my personal opinion. And right now, how these transactions are made globally, you have one entity, it's a centralized entity, which is fine, but it's a card network that's basically validating these transactions. So it's one entity that's having to use barely any data to try to authorize all these transactions in real time. Then they're facilitating all of the other messaging and making everything all happen. What we're really doing is decentralizing the risk in a transaction. So by decentralizing this collateral, allowing anyone to participate and have this collateral pool, essentially, you're taking the most expensive part in these transactions and now almost trivializing that cost. Because for an independent entity or person, for me to verify whether or not funds are good or a transaction occurred on the Ethereum blockchain, let's say, I can do that at a trivial cost, just using my browser. I can verify that a transaction has occurred. And so that's really what we're harnessing, and that this is the farthest thing from, oh, we really like technology, so we're going to try to push this into the market. It's actually completely the opposite, where it's a pull-based technology of this is needed to exist for quite a long time, and merchants have really looked at how you can fix something like this for a very long time. And it turns out that now these distributed networks are literally the ideal way of how to solve it. So that's our approach to that.
Thank you so much, Tyler. That makes a lot of sense. Yeah, we're definitely huge fans of the token, and think it does warrant quite a bit of value. So Evan, wanted to go back to you, and again, rules-based money. I think it's Ample was sort of the first to do what it's doing right now. Very, very novel. But then there's been a lot of talk about China launching their central bank digital currency, and other nations launching their central bank digital currency. And so you have those, you have, stable coins. You're not a stable coin, but another type of money. I mean, how do you see central bank digital currencies fitting in with, your project and just, the entire space overall?
Wow. Yeah, that's a really good question. So one of my academic advisors, Manny, has a really good thesis about this. And I think it's actually, the theory is that central bank digital currencies in the case of China are a matter of monetary politics rather than a matter of monetary economics, right? It's actually a play to further vertically integrate an accounting system such that you can really supercharge your economy, understand where the money is going and what the output is as a result. And this is following an accounting practice that was borrowed all the way from the Soviets back in the day. And they've just had this self-strengthening mandate throughout time. By comparison, the United States and the Federal Reserve here, they don't have that same kind of self-strengthening, surveillance, vertically integrated accounting mandate. And so an introduction of a central bank digital currency in the US would have to come from a very different mandate. And so we don't see, at least right now, a great deal of benefit to a central bank digital currency from a monetary economic perspective, but it can make things a little bit more transparent. I can see how, you could more easily follow accounting practices. And if you were trying to advance kind of the dominance of a currency, a sovereign currency beyond natural borders, then, taking advantage of, the ability to give people access to money without giving them first access to a bank as a way of kind of creating new users, so to speak, seems like a viable strategy. But I think that's completely independent from like the function of assets like Bitcoin and the function of assets like Ample. Like I said, Ample is kind of more like a commodity money. It's completely uncollateralized, it's irredeemable. And the only thing that's special about it is it preserves a unit of account. Now, it turns out that's actually really important because we're trying to build this alternative financial ecosystem. At least that's a big part of this DeFi movement. The decentralized finance movement is kind of like a basic set of banks. And this is another revelation from our academic advisors, is that, DeFi today is much more like 15th century Venice than 18th century England, right? Where you have these rocks, right? But you don't yet have banknotes. And so when you talk about payment rails and you talk about transactions and we talk about kind of the modern day uses of a banknote or cash equivalent today, we're pretty far away from creating a completely decentralized version of that. What we have are these kind of rocks, right, that are pretty volatile, like Bitcoin and Ample. And what's missing is a series of derivatives on top of these rocks. And so you could kind of refine these rocks essentially by kind of re-segmenting the risk associated with these rocks, such that you could create an asset that becomes a much better collateral asset for the issuer of a banknote. And so what we're really kind of excited by is this kind of effort to kind of fast forward the DeFi universe from 15th century Venice to 18th century England, such that it can plug seamlessly into where these guys are really with their payments, right? And that's just completely unrelated, I think, to the central bank digital currency piece, but it does underscore the importance of being kind of censorship resistant. So you can imagine if, there's a sovereign state that wants to have a monopoly on its stable digital currency, and you can be regulated through something like the Stable Act or whatever else there is out there, then eventually you might be regulated. And so to create a viable alternative is to kind of stick to the virtues of decentralization, I think, and to build the future banking system on top of that as a viable building block, rather than something that could be rug pulled, right? If you build this future economy on top of something that could be surveilled or censored or stopped, then you might be constructing this magical thing on top of just a house of cards. Whereas if you build it on top of firm building blocks, however more cumbersome it may be to have to go through the motions of like taking Bitcoin, refining it into kind of bonds, and then using those bonds as collateral for, the issue of a stablecoin or something like that, however that might take place, you just kind of got to go through it the hard way. Otherwise, your foundation isn't very strong. And so just, I guess to summarize it right now, we're all kind of asking to dig into the ground and to get gasoline that we can put in our cars, when really you dig in the ground, you get something more like petroleum that needs to be refined into kerosene and gasoline, and then you can take that gasoline in and put it into the cars. Again, this is the metaphor from our academic advisors, but like, I really think that's where we are, and we're just a couple refinement steps away from having that banknote-like money that plugs perfectly into payments networks and such, B2B payment cash equivalent networks and such, and gives everybody what they want. But we just got to kind of earn it the hard way. We can't really kind of fake it.
Got it. No, awesome. Thank you so much for that, Evan. And Alex, so I'm going to go to you. Yes, I do remember meeting you while you're at Blockstream, and Blockstream is really focused on Bitcoin infrastructure, and now you're working on a blockchain for institutions and enterprises, sort of like not the opposite but different from Bitcoin in that it is permissioned. And so there are folks out there that are more believers in blockchain and Bitcoin. And so there's a question from the audience: if transparency succeeds, does that mean that we don't need Bitcoin?
Well, it's a good question. I'm actually, a very big believer in Bitcoin and what it represents. I mean, I even have a little physical Bitcoin here on my desk that I have as a reminder. I think a lot of innovation in payments is additive. It's not a reductionist effort, and there are important new applications and problems that we solve with different types of innovations. And it's not necessarily about one outcome or one particular project or one currency. And personally, I've always been interested in solving real world problems and looking at where are there opportunities to take some of these advancements in math and science that are on the edges and start to bring them into kind of real world practical implementations. And so, I think that's maybe a little bit of a different orientation. I think we're also at a stage where, we continue to see a number of new protocols being developed. I think it's important to understand that there is no standard. These technologies are not interoperable. These are not. This is not public infrastructure, right? These are projects that have different community dynamics, different motivations, and just to kind of relate that to your question to Evan about central bank, digital currencies, right? While I'm excited to see central banks, interested in this area of technology, and I think that's good for all of us. I think it sends strong signals of how this technology is maturing. But I'm very skeptical that navigating some of these unique values and that are tied up in the different projects, whether it's Bitcoin or Ethereum or Zcash, like I have a hard time getting to a point where I can see a government picking a winner and saying, we're going to build our digital currency using this math and science or this protocol. And the idea that a government would have the ability to completely start from scratch, I don't think is viable. So I think that dynamic of a central government, picking a stone, call it Bitcoin, and refining it. I mean, that would send Bitcoin through the roof. It would be, it would be, kind of an endorsement of the underlying project and the asset in a way that I just don't see a government doing that.
No way.
And so, from that perspective, where does that leave us? I think ultimately we do have to kind of work through that refinement process, and we have to continue to advance the core science and technology to a point where we can see that it solves real world problems today. And I think that's got to be the primary focus, and I think that's what we're all about at Transparent. And I think Bitcoin has incredible things that it has brought in terms of innovations, and I think we can both coexist. I think at the end of the day, we have a world where the U.S. dollar is still in a prime position from a B2B, from just a payment perspective overall. That isn't to say that Bitcoin doesn't have a role to play either.
Thank you very much, Alex. And for Tyler, there's an audience question on, can you walk us through how foreign exchange is handled on Flexa in a quick step-by-step way?
Yeah, it's actually pretty easy. So it would work just like any other transaction. So Flexa itself, we allow the merchants to receive whatever payments they want. So if they want Bitcoin, if they want any other assets, we can do that. In fact, that's like sort of the default method. But 99% of them, especially the really large clients that we're working with, generally want bank deposits. And so it's dollars in the US, for instance. And so Flexa does not maintain liquidity. We are not an exchange. As a network, we work with those various providers, the licensed entities in the jurisdictions that we operate, so currently in the US and Canada. So not only does Flexa maintain all the licensing and has gone through all of this process to ensure that we're absolutely compliant everywhere that we do business and in the merchants that we work with, we work with entities that have similar values and also have that regulatory compliance angle. And so what we do is whenever Flexel will receive an asset, we basically sell it on an exchange, whatever exchange is going to be applicable. And that's actually where a lot of this magic can happen, because we don't have to go through foreign exchange through a traditional currency market. We use these digital exchanges. So what's really interesting is that, as an example, we could take Ether and convert. So let's say someone was in Canada and they wanted to spend USDC, like a US dollar coin, in Canada, right? There isn't really such thing as a USDC to digital CAD pair that exists on a liquid exchange likely. But what we could do is take USDC, exchange that for Bitcoin, send Bitcoin or use Bitcoin as the unit of account at another exchange that also then is regulated, and then trade that for Canadian dollars in that jurisdiction, and then pay that out to a merchant. And you could do that all essentially in real time, which is really amazing. So that's a real simple example, but basically we just use the exchanges and whatever base unit of account between them. Usually Bitcoin is going to be one of the most liquid pairs, but it really could be anything. And that's how we would do that.
Thank you very much. That's really informative. We have about 4 minutes left, so we're gonna, go into a question around product. I'm gonna do a round robin, and I'll go the other way around. I'll start with Alex, back to Tyler, back to Evan. But tell us what we should be looking forward to from each of your companies in terms of product. I know Evan mentioned a little bit around lending. I'd love to hear on Evan. There's a lot of types of money out there that have governance tied to it. So if you have any thoughts on that, that'd be interesting. But Alex and Tyler, let's start with Alex. What do we have to look forward to coming from Transparent?
Yeah, so right now we are focused on bringing together a settlement network that connects trading desks in the cryptocurrency industry. And so the idea here is that the crypto side and the cash side are both real-time, on-demand, API-driven, and 24/7, right? So that's our first vertical that we're serving with our settlement network. There'll be some announcements coming out here very soon. We have a really impressive group of financial partners working with us to bring this first network to market. Yeah, from there, we see a lot of really interesting opportunities to grow, along with a lot of the interest that we're seeing in this particular digital asset space with institutions in banks that are coming into the space.
Thank you. And Tyler?
Yeah, for us, it's really sticking really close to our ethos. So it's as seamless payments than merchants as we have, part of the checkout flow, not a separate payment, not a payment after the fact, not a waiting 5 minutes for a payment. Literally, how do you integrate this as seamlessly as possible? So it's not only all the in-store integrations that we have, and a variety of those will be coming, but it's paying at a fuel pump, right? Natively, just with your phone, being able to scan a QR code that's displayed on the fuel pump, and then you're done. It's also then our online product. So we're launching that online integrations next month as well. So the SDK will now have full in-store and online capabilities. So again, part of the payment flow while you're checking out through a standard checkout experience, not afterwards. It'll say, scan this code to make the payment and you're done. All part of the payment flow. And so part of that, it's getting a lot of great merchants, and then also more and more wallets. It's been unbelievable to see how fast it has grown. And I think people still don't appreciate how quickly in the prevalence digital asset, it's going to be everywhere. In fact, it already is everywhere. And for us, it's so much even beyond cryptocurrencies. It's, people talk about this all the time. It's loyalty points, it's coupons, it's your bank account balance. Literally any app that you have that shows you a number that you ascribe value to, that's what we're really trying to do, and enable it through a new payments rail that ultimately makes that super, super cheap to pay. And it's really that. We've got quite a few of those coming that we're really proud of. And the real key that I would just emphasize, it's no new apps, it's no new stuff. You don't need to download anything else. You don't need to learn new interfaces. It's literally we're going to come to you wherever you have digital value, any value on your phone in any capacity. That's
Yeah.
what we're looking for. So real seamless experience.
That's awesome. Thank you so much. And Evan, to you.
Yeah, again, just following this trajectory of bridging kind of 15th century Venice to 18th century England, right? Getting us from a bunch of stones to banknotes, right around the corner for us. I'm super excited about integrating with lending platforms like Aave, because people will really start to see what we mean by, you know, the use of an asset like Ample as kind of a unit of account in a DeFi protocol. You'll see that when that happens, you'll start to split kind of price volatility, which has this mean regressive behavior, from supply volatility, which kind of has this fat tail like distribution behavior. That will start to really have an effect. Beyond that, delivering on kind of, you know, the promise of decentralization, really decentralizing governance, as Paul kind of alluded to. That's always been part of our plan. And, you know, we're making strides in that direction that I think are also very exciting. Then continuing to complete some of these cross-chain Enwave bridges so that we can get onto this growing kind of multi-chain ecosystem that we see with Binance Smart Chain, with, you know, other players that, you know, we've been talking to and working with for a very long time. And finally, stimulating the creation of derivatives and integrating it, just putting the whole picture together. That's what we're excited by.
Thank you so much, guys. You know, we are out of time. Tyler, Evan, Alex, thank you for telling us about what you guys are doing, how you guys are disrupting payments, creating new money. And we will be back shortly. We have a panel Joey's going to be moderating on taking crypto mainstream to consumers. We'll see you guys soon.